Welcome to Equal Ground Headlines, bringing you your balanced coverage on trending top stories in Canada. I am Samuel B. Williams. On April 9, 2025, President Donald Trump announced a 90-day suspension of most new tariffs, aiming to ease global tensions and stabilize markets. However, two countries, China and Canada, did not receive this exemption. They remain in the trade crosshairs, continuing to face significant tariffs, while the rest of the world gets a reprieve. This selective application of tariffs has sparked questions across global markets and diplomatic circles. Why are these two nations being treated differently? And what does it signal about the Trump administration's broader strategy? Let's break it down. The 90-day tariff pause was framed as a calculated move. Market turmoil, international blowback, and mounting recession concerns had investors and economists on edge. By hitting pause, the administration sought breathing room. Over 75 nations now have a temporary window to negotiate fairer trade terms with the U.S. But while dozens of countries are benefiting from this policy reset, China and Canada are being handled differently, and intentionally so. Let's start with China. Tariffs on Chinese imports were not only maintained, they were increased to a staggering 125%. The administration made it clear this was a direct response to China's retaliatory 84% tariff on American goods. But the dispute goes deeper than that. Washington has long criticized Beijing over trade imbalances, intellectual property theft, and geopolitical posturing. Keeping pressure on China is part of a larger strategy to force long-term changes in behavior. President Trump, in statements this week, emphasized that America punches back harder, and this tariff policy is one of the key tools. U.S. officials hope that with tariffs biting into Chinese manufacturing and exports, China may be pressured into new negotiations on America's terms. Now, let's turn to Canada, an inclusion that surprised many. Despite being a close ally and a partner in the USMCA trade agreement, Canada remains subject to a 25% baseline tariff on most goods. Why? According to administration officials, this decision stems from ongoing concerns about cross-border drug trafficking and illegal immigration. President Trump has also accused Canadian officials of failing to do their part in border cooperation and has suggested that trade penalties are a necessary wake-up call. Some exemptions exist for Canadian goods that meet strict USMCA criteria, but for the most part, Canada finds itself frozen out of the 90-day tariff pause. The economic effects are already being felt. Analysts note that Canadian industries, particularly agriculture, dairy, and metals, are seeing pressure mount. Meanwhile, Canada's trade minister has labeled the decision punitive and politically motivated, urging a reconsideration. As for China, the impacts are even more severe. With 125% tariffs in place, American companies that rely on Chinese components or products are scrambling to adapt. Supply chains are shifting, prices are rising, and Chinese firms are starting to cut export output to the U.S. While some American manufacturers may benefit in the short term, economists caution that prolonged trade barriers could lead to inflationary pressure and global economic contraction. On Wall Street, the initial announcement of the tariff pause triggered a relief rally. Stocks surged, but as details emerged, especially regarding China and Canada, markets have turned cautious again. The uncertainty looms large. So what does this all mean? For one, the Trump administration is sending a strong signal. Friends or rivals, no country is exempt from trade accountability if it doesn't align with America's interests. For China, the message is forceful: renegotiate or suffer economic consequences. For Canada, the message is more complicated, part economic, part political, and undoubtedly strategic. As the 90-day pause unfolds, world leaders, investors, and consumers will be watching closely. Will this move bring countries back to the table for new deals, or deepen divides? That depends on how the next few weeks play out, and how hard the U.S. is willing to hold the line. Stay tuned.